Hello and welcome to the latest episode of No Accounting for Taste with me, Matthew Ord, and the familiar voices of Accounting Web's managing editor, Richard Hattersley,
Hello.
and technology editor, Tom Herbert.
Hi, everyone.
Now, I say familiar voices. Richard, let's address the elephant in the room. People may well have forgotten what you sound like, as we weren't actually sure if you were ever going to join us again.
How many weeks has it been since last was on the pod?
Oh, 3 or 4 episodes, Tom?
Indeed. Yeah, a good month and a half, I'd say.
Crikey. It was almost at the point where I was going to be replaced by someone else.
Yeah, early negotiations are ongoing with producer Molly, but you've stepped in at the right time, so you shall be relieved to know. Well, it's a pleasure to have you back in the room, and it's a glorious day for it too. As before we get into things, I want to say that at the time of recording, it is less than 12 hours until England play Croatia in the World Cup. After my appalling audit prediction at the start of the year, I've been waiting for a moment to turn the tables and ask you both to make a prediction of sorts. So, Tom, predictions, please, for this evening's game.
Goodness. I'm going to say a fairly drab 1-1. Lots of sideways passing. The Croatians getting a bit tired towards the end, and then England snatching a late equaliser.
What a truly horrendous affair that would be. Goodness me. Richard, thoughts?
One of my most infamous articles I ever wrote for Accounting Web was about the Monte Carlo simulation. Kind of how you go about doing it on Excel. I had literally no idea what I was writing about. It's probably one of like the first pieces I wrote for AWeb about 10 years ago. So I may even consult that very article, run a Monte Carlo simulation. And by the time I've worked out what a Monte Carlo simulation is, the match will be over, so who knows? So I'm just going to go follow Tom's lead and go 1-1. Why not?
Good. 2 predictions the same. Love, that's what you like to see. I'm going to go with a bold 3-1. I'm going to go with a bold 3-1. And by the time this goes live, one of us might look like some sort of wise guru. Like, you remember the octopus, Paul the octopus, that made all those mad predictions a few years ago? What an absolute dream scenario that would be. It's a shame we don't have more animal-based predictions for these kind of tournaments, isn't it?
We could roll it out for accountancy. You know, when will the audit reforms come in and get some kind of mystic cuttlefish to come up with the answer?
Well, there's no natural segue from a psychic octopus to Richard, so I will just dive straight in. Most read news story on Accounting Web over the past week was the government's confirmation that small companies and micro entities will have to file profit and loss accounts with Companies House. It has been quite the saga.
It has, and I must preface this by saying that Tom, you picked up the story, you picked up the breaking news for us on AWeb. It's a story which I've closely followed, and one which, annoyingly, the story broke just as I was walking out of the door to jump on a train to go to an event. So, Tom, you picked up the story. So thanks.
Indeed, yeah, it wasn't as bad as you being up Snowden for the mini budget. That's if you had Snowden on your AWeb podcast bingo card, then you can tick that off now. That's yeah, no, indeed, both of you are swanning off to the big smoke and leaving me and producer Molly to handle the breaker. So yeah, there you go.
And this is, Matt, why you asked why you've not been on the podcast for the past month. It's a Snowden abuse.
It's you need a bit of time just to pull yourself back together.
Absolutely. Well, this has been a big story. It kind of really, I'm going to go through the timeline. I'm going to talk about just kind of what's happened, why it's happened, a big debate that's happened in between, and also the implications of this quite specifically when it's landing in 2028. More on that later. But before we get to that, on that point about it being the most read story of the week, I might even go as far as to say, and I'm going to get everyone's thoughts on this, it goes as far as to say that I think it might be the big story of this half of the year. Obviously, at the time of recording, we're coming 6 months into the year. And it's always a good time to do some reflections, what's happened, what's kind of the big stories. There's a few big stories that's come up at this 6 months point, and I'll be interested to get both of yours opinions on where you think this sits. Now, to me, I'm going to make the case in the next 10 minutes or however long you guys put up with me rambling on, but why I think it might be the top story. But there's another one, there's a few others which I've scribbled down as being like the the biggest story of the half the year. But I don't know, open forum at the moment if anyone else wants to put any other suggestions of the most defining story of 2026 part 1.
I think the that company's house security blunder that Dan Needle uncovered, I wrote that up for the site, and that did, yes, that did good business. That's the only one I can think of.
Yeah, I think the biggest biggest is a funny term, isn't it? Because is it the most read or the biggest impact? I think the audit reform bill getting officially canned was a bit of it's one of those, because did people see it coming? I obviously didn't with my road prediction, but that was a biggie. That was a bit of a milestone because it's just fallen flat since then, hasn't it? But yeah, I can't think of many that would sit above this one.
Audit reform, that's obviously quite a defining one, the company's house security one. The other ones I've scribbled down, launch of MTD, which in itself is a big moment, although probably the bigger moment will be happening in the second half of the year. So I'm going to probably say that's kind of more of a intro, more of a prelude to what could potentially be the biggest story of the year.
I think with MTD, it's that sort of the rolling nature of it that, not only is the sort of quarterly submission element there, but it's also the fact there are penalties involved in it. So I think it's going to be a fairly soft landing. The incline isn't quite as steep as it could have been. The only other big tech story that sort of rivals that has been around when ACCA pulled the plug on their remote exams. Was right at the beginning of the year. So it's kind of 5 months ago. But yeah, I think because of all the AI-based cheating, they decided to go back to majority in-person exams. That's all I got.
Which obviously that was a big news story. I'll do the rundown in a minute of the big stories, but that's obviously a big one. The other ones I scribbled down was private equity continues to be a massive story. If you haven't signed up already, come along to the Decision Line newsletter, subscribe there, and kind of follow that as a big story, which I've been covering there on our Substack. I think the moment this first half of the year was the news of the collapse of the Zenodin cell, and just the ripple effect of anytime you talk to any kind of big consolidator, any big firm, it always often comes up that as an example. And it felt as if there was obviously loads of reasons behind why it didn't go ahead. It's kind of the reasons are different depending who you speak with, but it did kind of shake the nerves slightly of some of the big firms. So that was there. And obviously the growing influence of AI with kind of Anthropic being kind of integrated in software as well, maybe that, but I think that's kind of more to come on that one. I think arguably, Tom, perhaps.
Yeah, again, that's every week there seems to be a new model or a new way of connecting that model to the accounting softwares. I'm not hearing masses from the front line at the moment. The Xero and Claude partnership, for example. I mean, I've spoken to Xero about it, but it'd be great to actually find an early Xero user who's actually using it in a meaningful way. I think I've got a chat lined up in a week or so, but yeah, it's fairly minimal at the moment. The potential is huge, but we're interested in boots on the ground, I think.
So if we're purely looking at the biggest story of the year being the one which creates the most impact on AWeB within our world, looking at the top 10, Tom, you mentioned the ACCA remote exams being in there, definitely in the top 10. Just throwing out some of the other big stories of the year. The company's house blunder is also in that top 10. But there's two stories in that top 10 which I'm going to talk about, which both are to do with the P&L filing, the profit and loss filing with company's house. Both of those are in the top 10, which goes to show just one, how big of a story it's been, and kind of the engagement from the accounting community, but also how there's been two stories that have bookended this first half of the year. One being that the reforms were essentially put on ice, and then, as we found out over this past week, suddenly it's all go. The green light's been given. So let's have a quick timeline about what's actually happened then. So this past week, we heard the news that that the government is going to go ahead with its plans for small companies and micro entities to file their profit and loss accounts with Companies House. But there's Tom, correct me if I'm wrong, but there's kind of the optional element for it to be public or not public, which was always a sticking point.
Yeah, there's an opt. There's a button you tick to opt to opt out. I mean, I kind of feel there should be a button to tick to opt in, but that's the decision they've taken. So yeah, which I think is a sensible compromise candidate given the backlash. You know, what did they call it? Like a sort of snoopers charter or whatever.
And looking back over the timeline since the moment that this was announced, looking back in the AWeb archives, way back in March 2022, when we first covered it, it's hard to believe it's been around for that long. When it was introduced, I think just soon after Russia's invasion of Ukraine, Companies House had a number of these big kind of efforts to increase security, increase the kind of clamp down on suspicious activity, and all this that was kind of happening. But this was the one big change that kind of jumped out and kind of stood out for our readership, quite particularly. And it was that reason which you mentioned, Tom, that kind of snoopers. The concern about kind of people snooping into other companies and looking into what they might be up to, which that kind of continued soon after that. I remember doing a webinar soon after, and it was somewhat it was debated quite passionately from both sides of it. But I think those who had concerns about people snooping were the ones who were slightly louder in the debate, and those who were I think my impression was, though, it was kind of tipping slightly in that favor of the majority of people, only slightly, maybe it might be 60-40 from my memory of those kinds of webinars, but those were the ones who were most concerned. The kind of quotes at the time, people saying this would achieve fat zero. People were concerned that the proposal would just kind of cause people to look at some kind of external people to look at this information, get the wrong end of the stick, and then come to conclusions, which the conclusions might not be the correct conclusions. Dan Heelan, a friend of the podcast, hi Dan. I remember I did a webinar with him way back in 2022, and he said, at the time, HMRC already has this information. They can talk to Companies House. We don't need this information out there for all the commercial world to see. For me, that main point is not achieving what is meant to, which I think essentially is kind of what we got back round to in the end. It just took a few years to get there. But over the course of those few years, then we had on Any Answers, a frequent topic that came up now and again was practitioners weighing up whether they should disincorporate in order to avoid being caught for this particular reform, which just goes to show just how passionately people felt at the time. One person said, I really do not want to publish my P&L. I work on my own and am intensely private. I probably earn less than some would assume and more than others, but I don't want to have this information publicly available. I really don't want my clients and neighbors knowing my numbers. I'm therefore considering disincorporation. So it got to the point where people were really considering just what they should do next. And then in July 2025, that's when a slight change happened. That's when obviously the new Labour government came in, and after a year in power, suddenly they wanted to be friendly a little bit more to business. And there was that infamous quote, Tom, which you quoted within your piece from the then business secretary, Johnny Reynolds, who's actually, in fairness, it didn't come from him. It came from an ally Jonathan Reynolds, who leaked it to the Financial Times, saying this would not happen as long as Johnny is in place. It doesn't fit our plans to cut regulation. Now, this was all kind of happening at the same time as like the employer rights bill was going through, which obviously was adding further kind of bureaucracy and further strain, if you ask any business, to what they're up to. So maybe that it might have been a slight kind of, I don't know, thrown something in their direction to kind of show that the government was slightly on their side. Maybe we could read into it like that, but it did. It happened at a time just as Companies House announced a timeline of what was going to be happening. So there was an awful lot of confusion when I think we published on Accounting Web Companies House's timeline. This broke like a day or two afterwards, and suddenly no one knew what was happening. There was confusion. The message was not kind of unified across everyone. We approached the Department for Business and Trade, and the spokesperson said the government is committed to avoiding undue burdens on businesses as part of our plan for change. So at the time, that wasn't a full throttle U-turn, but it did kind of suggest that something was brewing. And then we got to January of this year, and that's when the government announced that small companies and micro entities would no longer be required to file their profit and loss accounts with Companies House from April 2027. They essentially said it was on ice. That was at the start of the year, so that's what we thought. And then they did say the reforms are still under review and a final decision would be announced shortly, and the company was received 21 months notice to prepare. That was the announcement then in January, and then that comes to this past week when suddenly another twist in the saga is back on. We've suddenly got P&L filing back on the menu, only this time they can opt out of publishing information. So it's been quite a wild ride just to kind of get to that point when at the beginning, which listening to Dan Healing all the way back in 2022 saying HMRC already has this information, and we've now got to the point where it's kind of that opt out kind of publishing it. So the information should be provided, but it's up to you whether it wants to be public or not. So quite a wild ride over the past few years with plenty of debate either side on it. And the reforms are going to be coming ahead in 2028, which then does mean it's a super busy 2028, because if you look at the calendar, we've got MTD expanding for taxpayers with income over 20,000. This past week, we learned that the mandation for payrolling and benefits would be a phased introduction. So whilst we initially thought it would be coming in from April 2027, part of it will, but then other benefits will come in 2028. So that's been kind of kicked a little bit into 2028 as well. And then you get this in 2028 as well. So you kind of get the picture. A lot's going to be happening in 2028. So it's been quite a wild ride. And so I think for us to have the beginning and ending of this story, in a sense, happen at the first half of this year, I think in my mind, hopefully I made the argument that in my mind, it has been quite a defining story so far of 2026.
I think it has. It's certainly the bread on the first half of 2026 sandwich, isn't it? What's been the reaction from the profession to this latest change of?
I mean, it's mostly been, I'd say mostly welcomed. It's a difficult one. I think some people have thrown up their hands kind of saying, how did we get to this point to begin with? I think some people just see it as another layer of bureaucracy in that they have to provide this information that they already provide to HMRC. So there's that element, obviously, that we're reading on Accounting Web as well.
Do you think this is it so far as twists and tails go in this saga? Might we not hear anything for the rest of 2026, or do you just never know?
I mean, it feels like a decision's been made, a full stop's been added to this now. And I think we're now at the point where we made a decision, we can move on and plan accordingly. But maybe have to consult the Monte Carlo simulation and see if anything else will happen. But at least it then gives space for another story to compete as like the big one for 2026 in the second half of the year.
This is it, yeah. Let's give someone else a chance, for goodness sake. Lovely stuff. Well, thanks as ever for the insight, Richard. Tom, what have you got for us from Technology Corner this week? AI or MTD?
Well, regular listeners will be delighted to hear that it's not directly about AI or MTD, which I've been talking about an awful lot lately. No, instead it's about an HMRC policy paper. Wait, come back. No. The tax authority has slapped down a missive to agents reaffirming that what it's calling screen scraping, browser automation, or robotic process automation technology isn't allowed under the terms of its government gateway, regardless of whether that data is being read or written. And they've threatened that if they catch agents using these types of technologies, then they don't have the power to sanction the vendors, the technology vendors, but instead they will block agent access for accountants using that screen scraping technology, which I'm sure I don't need to tell you or our listeners is pretty serious.
Before we get cracking on this one, Tom, can you just give us an overview of what screen scraping actually is for those of us in the room who aren't too sure?
Sure. I mean, screen scraping or web scraping, as it used to be known, has been around for almost as long as the internet. It's basically the software equivalent of a member of staff logging into a page with credentials. So HMRC, a bank, whatever system really, opening those pages up and then copying the figures into another system without you having to manually do it. So firms using that first wave of cloud accounting software in the early 2010s, screen scraping tools were essential to get hold of bank feed information. So you had vendors like Yodlee or Tink, they'd hook up to the banks, scrape the data, and then pump it across to Xero or QuickBooks Online. Those worked to a point, but they brought in lots of duplicate transactions, missed out data. And so certainly in the UK, open banking replaced them with what we call application programming interfaces, APIs. So these are digital pipes that connect accounting software to third-party apps, bank feeds, HMRC, Companies House, etc. Rather than the screen scrapers, these APIs are more stable. They give users safer ways to share data rather than handing over your bank login to third-party tools. And with APIs, you don't need to share those login details to access the information. You just need permission at either end, as it were. I guess for tax, the equivalent shift has been HMR's move towards the software to HMRC submission under the Making Tax Digital program. Little callback to the earlier story, as well as the P&L filing. I think Companies House confirmed that from 2028, you were going to have to use third-party software to file. I think from then, your web and paper-based filing systems are going to be closed for accounts filings. Nothing else, just accounts filings. But anyway, I've digressed there. MCD for VAT brought in the concept that VAT returns had to be submitted through software rather than your manual web entry. And MCD for income tax is coming down the line as well.
So how and why are firms using screen scraping tools then, Tom? How have we got here?
I mean, every firm's different, but I mean, in terms of why, it's the old favourites. It's time and workload. Everything about compliance has become more digital. Work's become more frequent. So, I mean, Making Tax Digital, as an example, with those quarterly submissions. And just generally, firms are under a lot more pressure from clients. Digital means of communication means the communication is more regular. They're under pressure to monitor, provide more client data, spot problems earlier, and reduce manual checking. So I guess it's not surprising they've turned to tax automation tools. I mean, there are potentially thousands of firms I've spoken to who are using these types of tax automation tools. And they're needed essentially because HMRC's tech ecosystem is nowhere near complete. So, for example, accounting firms can't use software to pull down client details like penalties, interest, or specific balances on account. So it can't access the information via software, and it can't aggregate them. So, in other words, if you're not using technologies like this, then to get a full picture of your client base, up-to-date picture, should I say, you either have to manually piece this information together, or you fly blind and hope for the best. You can't do these things at the moment via API because HMRC hasn't built the API access that allows the software to, in their view, sort of safely draw down that information. Like you're not able to get a client list, as it were. So, yeah, I mean, reaction to this has been a bit frustrating, sort of frustration, as it were. So, on LinkedIn, when I posted, firm owner Daniel Liepman pointed out that in terms of development, HMRC is repeatedly ignoring the needs of agents, and so then with this particular proposal, blocking them from working around the problem.
So what's been the actual problem with the screen scraping tools then, Tom? What's the fuss?
Yeah, I mean, HMRC is pretty categoric about them, and to be fair, they've been pretty consistent on these tools. They view it as a security risk. How much of a risk? That's a good question. I mean, I asked if there had been a specific breach. I mean, not asking for names, obviously, but just to confirm whether there had been a breach involving one of these technologies, and they didn't get back to me on that one. But guess from their point of view, if agents are handing over their HMRC credentials, their login and password details to a third-party software provider, then those credentials become a target. If that software vendor gets hacked, if there's a breach there, that could expose access to all tax records for all your clients. If you're using APIs, that's more locked down. The details are more granular. The software doesn't receive or use the user's sign-in details. So I guess it's a control risk. With API access, you can be clearly more authorized. You can monitor what's going on, and you can revoke access as and when. If you give a software company your HMRC login, they've kind of got it. So yeah, that is an issue. And I guess also there's a client relationship risk. If a client says, well, why did your firm expose my details to a third-party tool when HMRC says giving agent login details to a third party isn't permitted? You're going to struggle to answer that question, I think. So yeah, there is a risk. But I think the fact that accounting firms, I mean, often they know about these risks and they choose to use the tools anyway. I mean, that should tell you everything that you need to know about what's happening at the moment. Richard talked about it earlier, MTD, companies' house changes, payrolling and benefits, anti-money laundering changes, pressure from clients. There is just a lot going on, and firms are trying to sort of look to tools to ease the pressure on that. I'd say the vast majority of agents just want to do a decent job that is within the rules. And I think if HMRC is able to provide a few of these services for agents so they can see, I mean, heaven forbid that they can see what tax their entire client base owes across the board. I mean, I think HMRC would find a lot more tax being paid on time if they provided that.
So sticking with HMRC then, how do they know that firms have been using screen scrapers?
So I think they can see them if it's based on behavior patterns. So if a firm uses a tool to monitor client tax positions across, 1,000 clients, if HMRC sees that every day at 3:00 in the morning, that firm is logging in to HMRC using the agent account, goes into every single client record, checks balances, penalties, interests, and then copies the figures, well, I mean, that's fairly easy to spot.
And at that point, what happens if a firm is actually caught doing this?
Yes, it is unclear, the exact process. I did ask. I mean, I guess HMRC wasn't keen on talking through their entire process with me, but, they said they'll deal with each firm on a case-by-case basis. Worst case scenario, though, they'll have their agent account blocked. Feels kind of vague, for how long? How do they get it back? How will they know in the first place? I mean, when I've spoken to agents who've had their agent accounts blocked over the years, and I think a letter kind of drops through. You're not able to access it, and then about a week later, a letter arrives at your registered address, which obviously isn't ideal. I mean, for an accountancy firm, having your agent account access blocked is pretty catastrophic. You lose the ability to check client positions, file returns, manage your authorizations. It's pretty disruptive to the legitimate work you're doing, and obviously can cause some problems reputation wise and cash flow wise as well. I mean, it's one of those things. HMRC says these are the terms and conditions you signed up for when you're using the government gateway. So, you should use software that's in line with our policies.
So what should firms do then, Tom? What's the big answer to it all?
Well, there isn't a list of approved or non-approved product like for MTD. So I think firms, if they're worried about it, they should go straight to the tax software vendors and ask fairly direct questions. Does the product collect and use HMRC sign-in details? Does it log in through the government gateway on the firm's behalf? Is an HMRC API available? If so, are you using it? Does the tool comply with HMRC's terms and conditions? So, yeah, I think those are some fairly fundamental questions. I think more broadly, the medium to long term brings HMRC into the equation. If the information agents need isn't available through APIs, manual checking and sort of that grey area automation just continues to fill that vacuum. I know HMRC have published these rather vague transformation documents talking about expanded external integration, but I think firms need more than these vague commitments. They need a published roadmap for these agent-facing APIs. They need clarity and a sort of safe route away from these workarounds that HMRC is clamping down on. I think HMRC is right to be worried about agent security, particularly with the cyber attacks we've had over the last sort of 12 to 18 months. But if the front door's not wide enough, people will keep looking for the side entrance. The challenge is to shut down that access without making ordinary compliance work even harder for accounting firms.
You said there needs to be a published roadmap, Tom. Any optimism at all that might be coming? Any kind of nods in that direction, or is it just on the wish list?
I'd say it's on the wish list. Like part of publicizing this, and I made a joke about an HMRC policy paper being fairly dull at the beginning, but part of shedding some light on this is to try and focus minds. I realize there's a lot going on, but I think this could be, we talk about productivity, right? It's a fairly woolly measure at the best of times, but a massive engine of productivity gains are agents themselves, because of the sort of flywheel effect of, making agents more efficient will make their clients more efficient in the long run. And it's frustrating that HMRC can't see that.
I think the line of "there's a lot going on" is always, it can very easily be thrown about as well, can't it? That's why there was a pin put in audit reform. We're not going to do that because there's too much happening. Well, there's always stuff going on. And if these things aren't prioritized, they're just going to run and run and run. And these people seem to love a saga, it seems. It's a funny one, isn't it? Well, thanks as ever for the insight, Tom. Fascinating story, and one which won't end there, I'm sure. I want to see us out this week with a look at a skill set that finance leaders are finding themselves having to have more and more. And it's one which AI just can't do, or at least at the moment. But you'd like to think it will never become part of their makeup. There was a time when FDs and CFOs could build careers on their abilities just to handle compliance, reporting, risk management. They did the numbers, and that was kind of enough. Soft skills, they mattered a whole lot less. There was an element of it, of course, but it was far from a core attribute. And now, as is the case with several elements of those roles in 2026, it looks a little different. I spoke to Alton Newtall recently, fab speaker and finance and operations director at Geoacoustics, about a few topics, because there's a lot going on in the world of the finance leader, but soft skills came very much to the fore. He made an interesting point. Soft skills were never undervalued in the past, more they weren't needed. There's been a handful of drivers for this shift that we're seeing at the moment, the key one being the pace at which the modern world moves. There's an element of having to always be on, meaning people want their answers relatively quickly. And in Alton's words, colleagues don't necessarily have time to digest a full report or the full profit and loss package. He said, like any storyteller, you make the narrative work for them. And this thing with time, some of the stories you were talking about earlier, Richard, it seems like they happened a very long time ago, not just a few months. Time is just absolutely flying by. And there is this kind of urgency these days of people wanting stuff more and more. And I think as a finance leader, you are going to have the ability to have those conversations. It's part of the package now, isn't it? It's gone from being something of an introverted role to a real extroverted one.
Yeah, I would also argue that if you're going to kind of climb the ladder and become kind of more of a C-suite style finance leader, you kind of need these skills. These are skills which you kind of desperately need as part of your skill set. I remember speaking with a finance director who said that every Friday, I think it was like the CEO, had like a all hands meeting every Friday, and the CEO would stand up there and do like the big kind of vision stuff, and then throw it to the finance director, who then had to stand up every Friday and give like a numbers kind of thing. I think they called it Donut Friday, is what they called it. So everyone comes together. It was kind of like an American kind of thing, as you could probably tell by like the donut thing, and like donuts were all out, and everyone all the business had to come forward, and this person had to kind of, it was almost like performing like the things, and they were kind of relatively new to the position of what they held at that time, and it was like the quickest way to get over any kind of performance anxieties or anything was to do that kind of every week, knowing that was your time to do the performance thing. There's also an important point as well. If you're sitting around that C-suite boardroom table, and you're the only finance person there, and your job then is to communicate the numbers to everyone else. In a piece which we published on Accounting Web, I think it was a couple of years ago, was an interview with Zoe Kleiman from the BBC, and she raised that important point of kind of a great skill to have, which she has as a journalist, which she advised the readers, was the importance of storytelling and being able to talk about the numbers and talk about it in such a way that you're discussing this narrative and getting buy-in from everyone else around the table, which goes beyond just here's a spreadsheet, here's the numbers. You have to have that compelling narrative behind it, and that's an important attribute which any FD or CFO or any finance leader kind of needs in order to fulfill that job which is required of them.
Yeah, it feels like it's twofold at the moment, where you need to have, like you said, that ability to tell the story, to be able to speak finance, basically. I'm sure they can look at a P&L sheet and instantly know just what everything says, but to be able to translate that to someone who doesn't speak finance is obviously a skill itself. But then not only that, have the ability to stand up and kind of confidently have that conversation, have those discussions at every level, so that everyone is brought with you on that journey. And what I think will be an interesting watch now is how this shift translates to the next generation of finance leaders, because knowing there is an element of extrovert to the role might yield a change in who does or doesn't look to get involved in finance. I spoke to the new DJH CFO, Steve Bryce, recently, and he told me that more is expected of us. We're expected to be savvy around the technology, but also able to articulate and build relationships out in the organization. So that skills gap that needs to be filled, Tom, now it feels like the professional bodies might have to change the focus of what that draw might be for those people looking to enter the profession. Suddenly it's got the tech, it's got the influence, it's got people skills. It's become a different proposition, dare I say. It's become a little sexier.
Indeed. Your words, not mine, Matt. That's, yeah. No, It's definitely something you've noticed over the last decade or so, that the type of person entering the profession is very different. The opportunities are there, right? When 20 or 30 years ago, to work in accountancy, you needed to join an office with, your big server room and, all the computers sort of bolted down and everything. And you had to sort of work your way up. It was all a sort of very straight jacketed sort of way to the top, as it were. Whereas now, I mean, you need your practicing license, your qualifications, and a laptop and a bank account. A few software tools, and off you go. It can be a little more freewheeling and buccaneering, and you can kind of set it up. You've got your fractional CFOs emerging. You've got people sort of specializing in very niche areas of industry where they have experience. It is, I think, a much bigger draw. Whether, I mean, interesting, like looking at that traditional pyramid shape that like the big firms have, of sort of lots of people at the bottom doing all the sort of grunt work, and then sort of getting gradually moving to the top of the pyramid. I feel like that will change. But I think that's probably no bad thing, because I think it's fairly soul destroying stuff. And I think you lose a lot of people from the profession, a lot of good people from the profession along the way. So, yeah, I mean, I think definitely changing the equation for accountancy is a thing.
And now we wait to see if me calling the role of the finance leader sexy makes the cut. That's all we've got time for this week. Join us next time for a look at the big goings on. But until then, take care.